Good morning. This is Ron Brown. It's January 21st, 2023. I'm going to do a market report and I'm going to use HGS Investor and Thinkorswim. Show you how I'm using the two together. They're complementary programs and they work beautifully together. Anyway, let's move on. Standard risk disclaimer: any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. If you're not using High Growth Stock Investor, you should be, because it's the most powerful program out there for this type of analysis and prospecting. Just go to highgrowthstock.com and click on the trial link. Now I'm going to begin this presentation with a look at the NASDAQ composite. So what I'm going to do is click on the designer. I'm going to move into my user smart groups to the market analysis user groups. I'll click on the top folder. I'll click through to this, and then you can see in my files I'm using the top-down process views for market analysis, top-down analysis, major markets, and I'm going to concentrate on the NASDAQ composite. Now the chart that I'm using here is the first chart, and it is a standard chart I've been using for quite some time to do my daily analysis. If you look over here at the right, you can see that there was when I click on this dot right here, I'm going to make this smaller. It's just to compress it to make it a little easier to read. When I click on this dot here from yesterday, it said no supply, a sign of strength. And the reason that occurred is because the market sold off, but notice where the daily range closed and look at the volume compared to the prior days. So it was a lower volume day when compared to prior days, and it moved up some in its range, so this generated a no supply, a sign of strength. Yesterday the market gapped open, and if you look over here you can see it gapped open 0.65%, and it closed at the high of the day, or right near the high of the day, 98.94%. And that generated an effort to rise a bullish sign. So this was a good VPA flag. This was a good flag here too the day before. High volume down bar after an up move on high volume indicates weakness, and it did, and it followed through and gapped down, and then buyers stepped up. And notice there was a automatic support line down here which it did not get to, but this turned out to be a good signal on heavier volume. There's heavier volume. This closed near the high. Consequently, there's an effort to rise bullish sign. Now I'm going to move down to another chart. I'll just go down one level, and this is a comparison of the NASDAQ composite to the S&P. When this blue line is moving up, it means the NASDAQ is outperforming the S&P 500, and you can see that it clearly is. It has been for quite some time now. So this has been a strong rally, and it's been a lot of NASDAQ stocks because it's outperforming the S&P. And now the next chart, I put the AD line in here rather than the ARMS index, and you can see that this has been moving up for some time. But rather than looking at this one, let's just go down and look at the new highs versus the new lows on the NASDAQ, and you can see the new lows are falling off and the new highs are coming up. Not a lot yet, because there's a lot of work to do to get these stocks up in the new high range. If I zoom out on this, you can see that we're well off of the selling on the new lows. Here, these are new lows right here compared to new highs, and now the new highs are surpassing the new lows, which is a good sign, obviously. And one more on this. Now this is the AD line on the NASDAQ, and you can see that it has turned up along with the market. But I think the most telling of these charts is when I go back to number 1A compared to the S&P 500. With this line going up this strong, it tells me that there is a lot of strength in the NASDAQ compared to the S&P. Now another way we can look at this is I can go up here and I can click on the ranking module and bring it up, and I'm going to put it on raw relative strength, and I'm going to compare to the SPX for, let's just do it 3 weeks and see what happens. So it's outperformed the S&P over the past 3 weeks by about 3%. It's 100 is the base on the S&P. You can see that down here, and we're at 2.82%. So it's clearly outperforming. Bitcoin is coming back. Don't ask me why, but it is. But the stocks, the real strength has been in the stocks and the transportation sector when compared to the S&P 500. Now I want to point out that these charts, if I go to, get rid of this right here, go to the NASDAQ or the NYSE composite, these charts are available for the NYSE. Also, you can look down here at the advancers versus decliners and the advancing versus declining volume and so on. All of the same information is available for the NYSE as for the NASDAQ. Now I've got to get on the right chart here. So advancing versus declining stocks, advancing versus declining volume, new highs, new lows, and the ARMS index. And if you go down the list, you'll see that I have duplicated these charts. Now the NYSE over yesterday did not, it actually underperformed the S&P 500 because the blue line is down, but during this period it was outperforming the S&P 500. New highs versus new lows. You can look at all this on your own if you want to. And then this is the advancing issues versus declining issues. And even though this is pretty flat here, you can see that the advancers and decliners started moving up. Well, right in here, right in that area. Now I want to point out that with any of these indexes or any stock, even though these charts were designed for the NASDAQ and the NYSE, I'm going to go back to this one, the relative strength versus the S&P 500, and this time I'm going to go to the Philadelphia SOX semiconductor index, and you can see that the semiconductors were really outperforming the S&P 500 because this blue line is going up. Now this information down here is irrelevant because it's for the NASDAQ, but the blue line will tell you the strength of anything you want to compare to the S&P 500. For example, here's the small cap 600. Look how this was moving up. It may not look as impressive with these candles here, but when you put this blue line and compare the S&P 600 to the S&P 500, you can see that the small caps were moving up nicely. At the past couple of days, they have turned down compared to the S&P 500. Okay, I'm going to move on from this. You can really get a good feel for the market just by using these charts. But I want to go into my market analysis user groups, and I'm going to go down here to the major indexes, industries, and sectors, click through to this, and then I go to a different view. I go down to my top-down scorecard for HGSI analysis, and I can click on this. Number 3 I like to look at because it, when you're sorted on raw combo, it gives you the advancing issues versus the declining issues. Look at this, 29 to 1 yesterday on the semiconductor index. And here's the percent advancing compared to the declining. On all the major indexes were up 25 to 1. The industries index, these are the HGSI industries, 165 were up and 9 were down. Dow Transportation, and so on down the list. You can come look at this yourself. But even the utilities, 2.84 to 1 positive, and it's at the bottom of the list. It just shows you how strong this market was yesterday. Now I want to use the S&P 1500. I'm going to go to a different set of charts. If I can find them. And I'm going to look at this one. This is my buy-sell chart. I'm just going to go to a plain one without the moving averages. And when all of these are dark green, it means it's a very strong day. There was a very strong day back here. I'll put the crosshair on. And that date was January 6th, when we saw an effort to rise and all of these turned green. These are advancers versus decliners, advancing volume versus declining. If they're over 5 to 1, this is dark green. Forex index 2 and 13, and then the volume point of control gave me a green buy signal. And it really hasn't turned down since then. That's on the 6th. Now I'm going to go back up to chart number 5, the percent of the stocks above their moving averages, and you can see what has happened. The percent above the 20-day, it was clear down here. Now it moved up sharply. These all moved up sharply as money flowed in to the market. Now you can use these charts on any index. I try to use them on the broader indexes. Let's look at the S&P 500 here. And you can see there was a pullback on the 2 days, and then it turned up again. And let's take a look at chart number 6. Chart number 7, eliminate the moving averages. You can see there was a buy signal on there. Now notice that on that sharp down day 2 days ago, it didn't happen on the S&P 1500, but on the S&P 500 it gave a sell signal. And yesterday was a light rose, which was another sell signal on that, and then it reversed yesterday with an effort to rise with all of these turning green. This chart doesn't work all the time, but it's really a good guide to see how breadth is in the market. I'm going to switch over just for a short while to Thinkorswim. This is the information from yesterday, and I'm not going to spend a bunch of time on this, but I do want to point out how useful this is. Now, this is a 4-chart grid that I've been using, and I took all the moving averages and things off here. I'm just interested in price, and if there's volume along with it, I'm interested in volume and the VPA flags. Now, there's no VPA flags here because what I'm looking at are advancing issues versus declining issues. This is for the NASDAQ. I'm sorry, for the NYSE. This is for the NASDAQ. Now, what we have over here is the weekly bar, and this would be 4 days this week. Monday was Martin Luther King's birthday holiday, and this shows the demand for the week. So it opened here on Tuesday, 106.94 approximately. Wow, this is very sensitive here. Let's say around 120, and if I go over here, you can see that, well, around 122.73. So these bars represent the demand for the week, for a day, for 78 minutes. 78 minutes equals about 1 day, and then this is a 16-minute chart, which equals about 78 minutes. So why I really like this is I can see, especially look at the daily, the 78-minute and the 15-minute, the ebb and flow of demand throughout the day based upon advancing issues versus declining issues. And here's where it opened yesterday. The demand was there, and then it sold off, and then it came back up, got all the way back up to this area, and then by the close it finished at 2072, and you can see the 2072 here and the 2072. But this was the intraday movement. You can see it gapped open here, traded down, and then money started flowing in every 78 minutes, and that was clear here too. So it just gives me, or us, anybody who wants to use these numbers, the ability to see the ebb and flow in the market. Now here's the NYSE. You can see this one closed closer to the top at 1859, advancers over decliners. And this built, after this, the initial gap up and then the sell-off, it started building, went slowly and then pulled back, and then at 12:32 Central Time, this bar was generated or finished, and it just moved up from there into the close. Very strong close. I'm going to go into Market Watch. Let's see. I want to locate the industries that I imported, HGSI stocks and industries. These are stocks that were imported into, all right, I just created a watch list is what I should say. And these are all of the stocks which we have assigned to industries. And I can just create a watch list, which I did, and then they'll show up here in the Market Watch. Now their groups are a little bit different than ours, but not that much. It's great how you can create a watch list, so and TOS will break all this down as far as sectors and then industry groups. You can see that there was a lot of strength in information tech yesterday. This corresponds to the outperformance of the NASDAQ when compared to the S&P and so on. I showed you that earlier. And the lighter ones show the greatest gains, and the bigger ones, the bigger squares, that's the market cap. You can see the large market cap stocks. Look at NVIDIA up 6.41%. Now you can come in here and you can send NVIDIA to red if you have that linked, and then here's the 4 charts of NVIDIA, weekly, daily, 78-minute, and 60-minute. You can see why I just like to use this grid without any lines and so on it, because it really gives a clear picture of support and resistance, and the VPA flags, which pretty much correspond to the HGSI VPA flags. They're not exact, but they're close enough. Okay, back to the Market Watch. And if I want to go deeper into the information tech sector, I hold the Shift key and it goes deeper down, and you can go down deeper. Semiconductors, isolate on semiconductors, and it shows you which of these semiconductors were moving the most. Now, I can also go up here and get away from the heat map and go to the index watch, and then select a watch list, and let's use the NASDAQ 100, and you can see the bars here. The highest ones show the biggest gains yesterday. Okay, I want to move on from this. I'm going to minimize this. I want to show you something that I'll put in. I'm going to go to a basic, get away from my market charts, and I want to go to my daily analysis black charts. I'll go to end of day charts, and then I'm going to go into the designer. Now, after looking at the discussion on the Skype board for the Insider Club, and if you're an Insider Club member or an HGSI user, it doesn't matter. You can join the Skype group by send me an email or send Paul Reich an email, and they'll give you the link. But we have discussions on there. Sometimes it's active, sometimes it's not so active, but when the market heats up, it gets pretty active. Anyway, there's discussion about low risk entries and so on. Now, if you're an Insider Club member, and if you update today, you get all of these smart groups down to this point. And what I did is I added a smart group user smart group I call low volume tests fan up. What I'm looking for are stocks, and I'll just click on the first one, which are giving us a test, and the fan is up. So if I go down here to number 3, I'm sorry, number 2. This is the one I want. No, it isn't. It's 2A is what I want. Sorry about that. Anyway, this doesn't look like the fan is up, but it is because they're still stacked in the proper order, even though they're compressed. But the important thing is there was a low volume test generated in a stock with the fan up. Now this isn't a real great example, but I'll get to some here in a minute. Now what I want to do is I'm going to go in, I'm going to edit this and go down to low volume test fan up. I want to show you how I put this together. I'm using all securities, but here is the filter. Now, if any of these occurrences happen, if a VPA flag equals low volume test, test 1, test 2, these are different tests. Strength down 1, 2, which means the strength, they've been going down, but now they're finding support. If any of these things happen, it's going to appear in this scan. Now, days since the last VPA signal, I gave it a wide window. This really doesn't come into play that much, but sometimes, occasionally, there will be a signal that's a few days old, and I wanted to include it. But the fan uptrend is yes. Okay, I'm going to cancel this. And I'll just leave it on this. And then what I did this morning is I put a special view in here. And it's in my daily prospecting files. Just go down to the very last one. Tester supplier strength seen returning. And I got out of that group somehow. Sorry about that. And now I'll transfer that into this. And it's just a basic view, but I wanted to show what the flags are and the days since the last flag. You can see they're all 0, which happened yesterday. And then what these flags mean. High volume up bar on the close indicates strength. This is a description. Here's a condition. And what is the stock? United Rentals. So let's just bring United Rentals up. And you can see that in this instance, there's a beautiful flag. Fan. 200, 100, the 50 and the 18, and then the 3 and the 6. Here's a pullback. And then here is the strength down 2, which means high volume up bar closing on the high indicates strength. So the purpose of the design of this smart group is to help people find, or HGSI users, I should say, find relatively low risk entries into stocks rather than chasing stocks. Let's go down here. Let's do DI Horton. So what's this signal? Low volume test 1, which translates to strength seen returning after a downtrend. Wasn't much of a downtrend, but it was a downtrend, and there's your signal, and you can see that it was generated. The 3 did pull back below the 6 yesterday, so if you're interested in taking a trade like this, I'll just go to a different chart here. Let's just go to the basic end of day. What I would do, if I'm interested in taking this trade, I'll zoom in on this. I'll go to these tools over here, bring up the annotation tools. Right here, you can see it comes and goes. Click on the R. I would draw it from right there at the low to right at the high, and I could see that if I wanted to take this trade and my stop is at the low, just a few cents below, and I'd enter this into my spreadsheet. I'm risking about 4% on this trade if it continues to go up off of this VPA flag here, and these VPA flags were slightly profitable. This VPA flag was profitable. Well, probably would have been stopped out on it. Depends on, well, no, you never would have had a buy on this one. Here's your low volume test, and it didn't take out this high at all. So that signal was invalid there. But you can see all of these test signals and so on this chart. And these stocks are going to come up if any of these occurrences happen, and you can look for low risk entries. Let's just go through a few more. Here's a test for supply. Expensive stock, Old Dominion. The stop would be below this low, and it would have to take out the prior day's high. Pretty expensive stock. I doubt if the options are liquid, but okay, let's look at Builder's First Source here. I'm going to take a longer term perspective on this. Yeah, it's kind of loose and choppy, but you can see all of these tests. Here's that test, a confirmation. Here's a test of, what's this one? Up bar closing near the high. This is a confirmation of that test. Test. So a lot of these really do work out, and I just think this is a good way to find some relatively low risk entries. Okay, let's look at one more here. Phillips Conoco, here's your test. Here's a confirmation of that test. So it would have appeared on Thursday, and then it was confirmed on Friday. Now, if you want to see which of these are outperforming the S&P, you can quickly bring up the ranking module, and I have this set for 3 weeks. Let's just do it for 1 week. And Warner Music Group is outperforming. Let's take a look at Warner. And it sold off rapidly. Here is an effort to rise, and here's a confirmation of that on Friday. Must have been earnings news. I'm not sure about that, but this is how you can find the stronger stocks for the last week, and you can look for these tests or confirmations of the tests. You'll have plenty to choose from here. Now on Monday morning, when the market opens, what you can do is, rather than looking at this view, which just explains what these signals are, I would just put this group in my 1A scorecard view. I don't have the intraday turned on, and it will show you which of these are following through. Or I will copy these comma separated lists, and I'll go back in to Thinkorswim, and here's number 5, low volume test. I created this. I'm going to edit the low volume test, and I'm going to import these and overwrite what was in there for Friday. So on Monday, I can see which of these are following through. Let's look at the chart here. You can see that on ABM here is a low volume test, which corresponds to a signal in HGSI. Okay, that's it. I hope you enjoyed this. I rambled on longer than I wanted to, but I wanted to show you what I stuck in, or what I put in the files for the HGSI Insider Club users. And I think you're going to find some really good trades off of this last scan, because you're looking for low volume trades, and you can define your risk in HGSI and then put that into my spreadsheet, and you'll know exactly what to do. I said I was finished, but I'm going to bring up a spreadsheet here. and show you. If you're an Insider Club member, you can certainly have it. Anyway, these are some trades I put in. I actually got into a couple of these on Friday, but it shows you the risk. I'm really willing to risk more because I got into these kind of late, but that's all right because the dollar amount that I'm risking is only 250 per trade. I know that. That's why you want a position size and know exactly how much you're risking, even if you take on a wider risk. Why did I take these on? Because these are low volume tests, and I'm hoping they follow through. I want to show you over here on the right, I have two different probing methods. This is something I read that Jesse Livermore used to do. He would never buy a full position. He would probe, and if it followed through, then the other would be executed. You put all three orders in, or put the first order in, and then if it follows, you can add the other two, or I actually put all three orders in at the same time. Then if a stock moves up quickly, I'll get filled at all these levels. Anyway, that's a quick thing, but this is a very powerful spreadsheet to help you manage your money. Thanks for listening and have a good weekend.